It's the tax man. Beep, ba, 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 da, bum. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of April 19th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Another pretty good green week overall in the markets. S&P and Dow ended up hitting all-time highs. The Nasdaq even rebounded a little bit, but the Russell is lagging, though it did show some signs of life. That being said, my personal small cap portfolio has been taking a huge hit. Even some of the stocks that I was most confident in have been absolutely tanking, and this is a little bit heartbreaking. But nothing material has changed about the companies except for the share price, so I'm not selling, I'm not closing out any positions. So if you guys are curious, my portfolio still remains the same. Without any further ado, let's get into the news. Just a reminder, I do publish all of my TA every single week, my technical analysis practice, to share it with you guys. The link is below the video. One thing I do want to note on the TA, for all of the stocks that I'm following, the RSIs are incredibly low right now. A lot of them are getting close to oversold territory. Sens at 32, BNGO at 32. ACRX is in oversold territory at 28.5. Shift is down at 38, and then there's a bunch of 40s. Typically with RSIs, that is a predictive TA measure, and once a stock ends up hitting oversold, there's a good indication that it's going to reverse, especially in a bull market. And we are in a broader bull market right now. So based on these RSI values alone, I would say that we are really close to the reversal point for a lot of these companies. Maybe this week, maybe next week, but eventually the Russell is going to start showing some signs of life and the entire index is going to start getting lifted. So I'm optimistic that this week is going to be the turnaround week for my small caps. Optimism. Seriously, I need it because it's just looking brutal in red land. First news story, US unemployment claims sink 193,000 to a pandemic low of 576,000. There's still almost 17 million people collecting unemployment benefits, but we have been tracking new claims in the news. The new claims are the indicator that's being used to see if the economic turnaround is specifically happening. And with almost 200,000 claims fewer this week, this is a really good signal. Initial jobless claims filed traditionally through the states fell to a seasonally adjusted 576,000 from 769,000 in the prior week. This is the largest decline since August. This is the first time the number of new claims is below 600,000 since the pandemic began 13 months ago. Both the state and federal levels falling off over time. I'm expecting Jerome Powell to be coming out and saying something, and of course the market's probably going to be reacting negatively to anything that he says, but keep in mind, this is the indicator that the Fed is using to see if the economic turnaround is happening. This, I think, was oddly the biggest news story of the week, and it's hilarious. There is a New Jersey high school wrestling coach who's the CEO of a $100 million firm that owns one deli. The fact that the CEO is the wrestling coach of the high school is not impressive. You know, people have multiple careers, whatever. It's the fact that this $100 million market cap company that is publicly traded OTC has one location, one gray deli, and they do about $35,000 in revenue a year. $35,000 in revenue, $100 million market cap. Huh. That doesn't seem right. Here's the deli. It looks like a deli that does $35,000 in sales. This was brought to everybody's attention this week when hedge fund manager David Einhorn mentioned Hometown International in a letter to clients Thursday, warning about the risks to retail investing. The stock price rose from about $3.25 per share up to a high of $14.50. Even at $3.25 per share, this is still a $30 million company, which I don't quite understand when it's just a single deli pulling in $35,000 in revenue. The company trades thinly on the over-the-counter market. Thinly is an exaggeration. I was looking at the transaction history, and the company averages about 100 shares traded per day. The vice president and secretary is Christine Lindenmuth, a 46-year-old math teacher at the high school. The company description says, "We operate a delicatessen store that features home-style sandwiches and other entrees in a casual and friendly atmosphere." The more you read about this, the more hilarious it gets. gets. The company is run by a wrestling coach and a math teacher, but also it has international investors from Singapore and China backing it. In 2019, the company lost $150,000. In 2020, they lost $600,000, and somehow they rang up $300,000 in consulting fees. This company... This sounds like the kind of company that as soon as somebody tries to short it, the mafia is going to come and take people out. There is no doubt in my mind, this is a company that's being used to launder money. This is a front for something. There is no way that with international investors backing a single deli, it should hold this much of a market cap. If we go into Webull, the chart is really hilarious. You could go back and see September 2020 here, 950. The volume is nothing, 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 nothing. When it does trade, it's 100 shares. So each of these blips, 100 shares, 100 shares. Oh, this day's 150. Here's 100. It's just stair-stepping up in share price. Very artificial looking. Over here, this is after that news article was published. Suddenly, we went from 100 share volume some days to 42,762, and the share price ended up dropping. And it dropped to a low of $9.01, but immediately closed back at $13 a share almost. This whole thing reeks of manipulation and something illegal. I'm not smart enough to figure it out, but something. Next up, we have Alibaba. Shares soar in the wake of record antitrust fine. Last week, we covered Alibaba receiving a $2.5 billion antitrust fine from the Chinese government. Shares in Alibaba Group rose sharply on Monday following a record 18 billion yuan anti-monopoly fine against the e-commerce group as its executives vowed to rectify its problems and step up efforts to retain the merchants it does business with. Shares rose as much as 9% in morning trading. Sure enough, you could see this right here. This is from April 9th into April 12th going into morning trading. We opened at almost $238 after closing the previous Friday at $225. So this was a $13 price per share, 9% rise off the back of the fine. And if you remember last week, I kind of talked about this, how this fine is nothing compared to the revenue, the net income that they're pulling in. It's better to just have this cloud lifted off the company because the market cap has decreased by about 33% just since December, since this was going on. So as I said last week, further evidence this week, I think Baba is back on the move again. It's going positive. This fine was the best case scenario. Coinbase DPO'd this week. Coinbase closes at $328.28 per share in the NASDAQ debut, valuing the crypto exchange at $85.8 billion. The market cap exceeded $100 billion after its debut Wednesday morning, although fell later in the day. NASDAQ provided a reference price late Tuesday of $250, but because it's a direct listing, no shares changed hands at that price. The high price was $429.54 before dropping with a low of around $310. That's a lot of variability. When I saw NASDAQ set the reference price at $250 a share, I put in my bid price at $250 a share. Silly me, thinking that I might get a fill for that. When I woke up in the morning, I saw that not only did I not get a fill, but trading closed way higher than the initial price was supposed to be. So I think this is a little bit crazy. I think around $250 a share with the earnings that we saw last week, that was a fair price, but I think the current price is a little bit crazy, and I would not be surprised to see it work its way downward towards that 250-ish level over the next couple of months. Now, the caveat is that this is going to be tied to Bitcoin's price. If Bitcoin's price spikes, then we're going to see Coinbase shares spike as well. Also to note, the trading volume has fallen off a cliff, and there's way more asks than bids right now. I know this is after hours trading, but this is typically an indication that the price is going to drop the next day. The reason is, if there's more asks than bids, that means people want to close out their position. And if there's not enough buyers at the asking price, that means the asks have to lower their price. So as the asks lower their price, more buyers come in. That's the nature of the stock market. Wow. Next news story, RoaringKitty boosts GameStop bet after exercising options. I had to mention something about GameStop because if you have been following the saga, you know April 16th was the day that RoaringKitty's options expired. Now, if you don't know who RoaringKitty is, his Reddit username is Deep Effing Value, and he's the YouTuber who brought GameStop to everybody's attention as being a value play. He ended up exercising his call options. He didn't just sell them off, and now he's holding about 200,000 shares of GameStop. So he had 500 GameStop call options expiring on Friday at a strike price of $12 per share, which gave him 50,000 more shares. The stock closed at $154.69 on Friday. On top of that, he bought another 50,000 shares, doubling his holdings to 200,000 from the 100,000 he had at the beginning of the month. His total investments in GameStop are now worth more than $30 million, giving him a profit of nearly $20 million. The man is a diamond hand legend. He got in at the right time. He believes in the company firmly. He's still holding his shares. Now, hot take. I know he likes the company, but I actually feel like he might have been legally compelled to do this. He is taking part in the congressional hearings right now over the GameStop situation. Not just him, but Vlad Tenev of Robinhood, the Citadel managers, the closing house people. Everybody is being looked at as to see what happened in the situation, to show that he truly believes in the company and wasn't just pumping the price, which that's not what he was doing. But to show that, I feel like he exercised these options intentionally just to kind of demonstrate to the world, no, I love the company at any price. Because the option strike was so low, he's still sitting way in the money. Fantastic gains. Good job, Keith Gill. Thank you, RoaringKitty, for your service. Additionally, last week, I wanted to just touch on this. If you remember on earnings, we had a lot of the financial institutions reporting their earnings. A lot of them were pretty good. The banks were doing pretty good. A lot of the earnings were good. But one that really stood out to me was BlackRock. I love BlackRock. Their Aladdin AI has proven itself to be absolutely phenomenal at risk assessment. They have been the world's largest asset manager by AUM. What's most notable, in quarter one of 2021, their AUM crossed $9 trillion. This is such a phenomenally huge number, I really can't even comprehend it. The BlackRock AUM is like 40% of the US national debt, which is in its own right way higher than it should be, but hey, we'll just keep printing money. There's no way that blows up in our face. EPS was just insane. $7.77 EPS, which was up 51% from the previous figure. Absolutely phenomenal numbers all around. Last week, we also touched on EHang. EHang was the Chinese flying taxi company, and I mentioned that if they did not have a stellar earnings report, the share price was going to fall further because there was still a lot of uncertainty around the company due to the short report and the company's failure to address some of the issues in the short report. Looks like I was right on that one. I'm sorry if you're an EHang holder. I hate being right when people lose money, you know what I mean? But the writing was kind of on the wall for this one. EHang Holdings traded down as much as 11% on Friday following the earnings report. They reported a fourth quarter loss of 7 cents per share, missing estimates by 4 cents, which means analysts were expecting them to be reporting a loss of 3 cents per share, but they lost 7 cents per share. So either way, it's negative, but this is just much more negative. Revenue was $8.4 million. Quarterly revenue was up 6% year on year, but it still fell short of expectations. So the revenue was up, the sales were a little down compared to the quarter year on year, but the earnings per share being down ended up driving down the share price, obviously. If you look at the EHang chart, you can actually see right when the company released its earnings report. You had high trading volume the next day. The day before the earnings, we closed at $28.93, and the morning after, we opened at 26. So we actually ended up losing 6% this day. We regained some of the losses, but it could have been worse. If you remember, when I made my video last week, it was sitting here at $33 a share. So we're down to 28. Should have shorted it. I just didn't have the faith in my own conviction there. Another short report was released this week, and this one is on QuantumScape. During SPAC week, I covered Microvast, THCB, and I was talking about Microvast as being a very promising EV battery company with a global network. They're already generating revenue. They have net income. It really looks like a financially strong, viable company. In that video, I compared it to QuantumScape, which is a company working on a solid-state battery. At the time of the video, I think QuantumScape had something like 4 or 5 times the projected market cap of THCB, despite the fact that QuantumScape is not predicted to have any revenue for another 4 years. I thought the valuation was a little bit absurd, and apparently this caught a lot of other people's eyes too. This is an investigative report by Scorpion Capital. This is a very detailed one. It's 188 pages. You can get this by going to scorpioncapital.com. It's on their front page right now. The company obviously shorted QuantumScape before releasing this report, so they have financial incentive. You need to take everything in here with a grain of salt, but some of the evidence is very damning. They did interviews with a bunch of former employees who spoke badly about the management as being con artists, spoke badly about the product, the tech behind the product. They even spoke badly about the statistics and data reported to the public as being cherry-picked, like the best of the best, not the true reflection of the study results. The first 33 pages are the preview. People always talk about the Volkswagen investment into QuantumScape. In this short report, they go on to talk about how Volkswagen is actually fleeced and they don't know what they're invested in, which that's a pretty bold claim, but who knows? I mean, GM invested into Nikola. They compare them to Theranos, which that is a rough comparison there. That's one of the biggest scams in stock market history. They actually go into the tech behind the phony claims for the battery performance. They break down the scaling, manufacturing, cost issues, the background and warning signs of this being an impending pump and dump. I would, of course, expect you guys to, if you're interested in this or if you're holding QuantumScape, read through this short report. And if you are a holder of QuantumScape, don't get angry when you're reading it. Instead, try to look for claims to refute what's in the short report here. That's how you battle negative information with positive information. Don't just get angry that somebody wrote a short report. A short's opinions on a company are just as valid as a long's opinions on a company. You have to remember that, and we have to be a little objective in our investments. If we look at the QuantumScape price, we can see this is when the short report was released, and it ended up dropping the rest of the week. So it was released on the 14th at night, 15th we opened up, and we ended up losing about 6% that day. Overall, we've ended up losing substantially more. Gone from a close of $41 to a current price of about $35.50. QuantumScape has had a rough time already. At one point, had a high price here back in December of $132.73. A lot of the issues that were brought up in the short report are not short-term fixes. This isn't something that the company is going to be able to release PR to salvage, because a lot of the criticism was from the technical perspective about the company not having a product that can function the way that it claims. The only way for the company to dig out of this hole is to demo the product, show us what you got. And methinks they cannot do that. So this is not a good situation for QuantumScape. Now, we've been talking on this channel about homes and the housing market for a little while now. And typically the housing market in America is tied intimately with economic health. When the economy's good, people buy new houses, people build new houses. When the economy's bad, they don't. Simple as that. Housing creates a huge number of jobs, and it leads to the success or failure for a lot of companies, from raw materials companies to construction companies themselves to interior design, retail companies, when people have to fill that house with new shit. We've seen with Lennar's earnings, with KB Home's earnings, that housing construction is backed up more than the companies can handle. This news source is from the reputed news outlet Floor Daily, which is your #1 source for everything flooring related. The reason that I'm using this is because it was a Bloomberg article and I'm paywalled, so it's the same numbers. Okay. Housing starts rose 19.4% in March. This is 19% above the estimate. If you remember last week, I talked about the options play buying leaps on Resolute Forest Products, RFP, because they're a lumber provider. Lumber right now is at incredibly high prices, like historically high prices. Lumber is used for a lot of this home manufacturing. Most American homes are constructed out of lumber. So in my mind, it made sense because I've been following the housing industry. I knew that the demand was there. Lumber prices are high. Bet on the lumber company. When I talked about that option, I talked about selling at 50% gains. Well, it's only been a week and I am already up 78% on my option play because the price absolutely spiked on Friday from $12.70 up to about $15. Now, don't kill me. My options on Robinhood, I just had more money on that account at the moment to buy the leap. But 78% on a leap in 1 week. I think I'm going to let this one ride a little bit more and I'm going to get a little greedy on it. But this is, I think, a great example of how you can understand the material cost and how it affects the supply chain, and you put everything together as an investor. Well, I've been following earnings reports for home builders, and they're backlogged. Oh, homes are built from lumber. Lumber prices are high. Oh, okay, I'll bet on a lumber company. You know, it just kind of makes sense when you put all of the pieces together. I'm really proud about this one. I'm very happy for the way that I ended up working through this. Let's take a look at the upcoming earnings for this week. Last week we had all the banks. This week we have the first of the FANG stocks. Netflix is reporting. I mean, this is an exciting earning week no matter what. You've got some extra banks finishing up on Monday. Procter & Gamble, Johnson & Johnson. We got some pharmaceuticals companies, Abbott, IBM, Coca-Cola, you know, dividend companies, Chipotle. I love looking at Chipotle's. Ericsson. I'm an Ericsson shareholder. I've got a couple hundred shares of that one, so I'll be following that. But right now, I do want to take a look at Cleveland-Cliffs because I have some open options on that one. And I want to look at Kimberly-Clark for my options play for this week. Cleveland-Cliffs. Now, I have some open options for Cleveland-Cliffs. I think they're expiring in June. The reason I'm covering Cleveland-Cliffs is because on this channel, I've actually been talking about steel now for a couple months and how steel prices are near all-time highs with all of the infrastructure plans all around the world, with China and the US choosing infrastructure spending to help their economies recover. Steel is in high demand. Cleveland-Cliffs is the largest domestic steel producer in America, so it stands to reason that they would be gaining. Cleveland-Cliffs has had some stellar earnings reports since the steel price started going up, but the share price has been stagnating. So a lot of people are feeling that the gains for Cleveland-Cliffs are already priced into the share price. That being said, I'm not expecting a huge gain off this earnings report, even though steel is so high. I am expecting, though, for the stock to resume its upward movement. The company is expected to post earnings of $33 per share, which represents a year-over-year change of plus 725%. That's a lot. And revenues are expected to be $3.8 billion, up 964% year on year. If we look at the chart for Cleveland-Cliffs, it peaked in share price at $116 a share, but that was back in 2008 before the great financial crisis. It dropped off. We peaked back up in 2011 at $95 a share, dropped off. So right now, even though we've had a bit of a run up from $2.62 to 21, this isn't like anywhere close to an all-time high for the company. I am expecting this earnings report to get us going back in the positive direction. Now it's time for my favorite thing, my options play of the week. This week, I'm planning on buying puts on Kimberly-Clark. I have thought about why very carefully. Now, Kimberly-Clark is the largest paper goods manufacturer in America. They source most of their paper products domestically from the United States and internationally from Canada, so it's all sourced from North America. Well, most of it. We've been talking about lumber prices being incredibly high. Something that's tied to lumber is wood pulp. Wood pulp is used in the manufacturing of paper goods like toilet paper, paper towel, diapers. All of those are products that Kimberly-Clark makes. It would stand to reason that if wood pulp prices are high, which they are, Kimberly-Clark is going to have a lower gross margin than usual because they're paying extra money for the materials, the raw materials they need to manufacture their products. This is on the St. Louis Fed website. I love their economic data. Fred here for the last year is showing me that for most of the year, wood pulp prices stayed flat. During the last quarter, which is what Kimberly-Clark is going to be reporting, wood pulp prices have gone up significantly. Here is a 18-year chart of gross profit margins for Kimberly-Clark, and this is sourced from their website. Generally, their gross margins have been increasing. Now, there was a huge dip here in 2018. If we go to the wood pulp prices, in 2018, wood pulp prices went up. So in 2018, wood pulp went up, Kimberly-Clark's gross margin went down, and then after that, their gross margin went up. What happened? Wood pulp went down. This isn't rocket science. This is like paper science. So paper science shows a direct correlation between the price of the raw material and the gross margin of the manufacturer. On top of that, the management in the last earnings call already warned us about this in January. Their CFO, Maria Henry, said commodities were favorable by $175 million in 2020, although they turned inflationary in the fourth quarter. We're planning for commodity inflation of $450 to $600 million in 2021. Costs are projected to increase broadly money in most areas, including pulp and recycled fiber, resin, superabsorbent, and distribution expenses. We know this. We saw lumber prices are up, wood pulp prices are up, Kimberly-Clark's going to be hurting. Let's take a look at their chart. They actually hit their all-time high price here in August. Since then, we've been dropping off. Right now, we're sitting at about $139 a share. We did reach a low of about $128, and that was just at the beginning of March. If you go into the financials here, check their revenue. Fourth quarter, third quarter, they had pretty solid revenues, even going back, and this was all during that lower wood pulp price. Their net income, though, has been decreasing. So this net income here was $508 million for last quarter. If their net income was only $508 million, and they're expecting an increase on the price of the goods that they're purchasing to be in the $450 to $600 million range, there's a chance that this company actually reports a net loss on the quarter. So what's my plan? I am going to be buying puts on Kimberly-Clark. Remember, with options, buying puts is safer than selling puts that you don't own, because when you buy puts, your losses are capped at the cost of the put that you purchase. And I'm actually right now eyeballing the $135 puts on this one. I'm not going to commit to that though, because I'm going to look on Monday morning and see what everybody else is thinking. But I actually really like the setup here, where a lot of the option prices are down from the weekend. The earnings is at the end of the week. That gives everybody the weekend to think about the bad earnings, and there might be a drop not this Monday, but next Monday, where I can unload the option and close it out. As usual, I'm not going to hold it to expiry. That's it for this week. I hope you guys did enjoy the news and earnings. Couple of updates. I did not record my MTN interview. They did reschedule it because they're moving studios. But on the bright side, it was rescheduled for the beginning of May, and instead of being a video interview, I'm going to be going into the studio in Seoul for a live interview, and I'm very excited about that one. It's kind of like a christening of their new studio. I think I'll be the first non-Korean recording an interview in that studio. Really exciting. Also, regarding my DD video this week, guys, I'm sorry, but I didn't have time to prepare one. I forgot taxes were due this week because my income, my primary source of income is from Korea, but I still do make revenue in America through YouTube and my trading across 3 different platforms. My tax situation is really complicated, and it took me a lot longer to file my taxes this week than I anticipated. That being said, I'm going to try to release a second video for you guys this week, but it's not going to be a full DD. It might be something like I did with the Go EV canoe video a couple months ago, where I do want to tell a narrative. There's a company that I have in mind about why I feel like it's a good value play. So hopefully I get that out to you guys later this week. I'm sorry about the DD thing. I know I said I was going to do it this week, but gotta pay the taxes. It's the tax man. That's it for this week. If you're new to investing and you want to support the channel, please check out my Webull referral link. It's below the video. If you sign up for an account, fund it with $100 using that referral link, you get some free stock, I get some free stock, everybody wins. Because I'm partnered with them and it's a special promotion in the month of April, the free stock that I'll be getting is worth $60 or higher. If you enjoyed the video, please like the video, subscribe to the channel, and as always, if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. Have a great week. Good luck investing.